Doing a quick charts of interest from February. We had quite an interesting time in February. The market was extremely overbought, extremely overextended, and just happened to be that coronavirus was around at the time, and I think that was just a convenient excuse for people to take profit. I think this sell-off would have occurred no matter whether it was coronavirus or something. Would have been, if it wasn't coronavirus, it would have been some other excuse. The media just seemed to like to get a bit hysterical about things like this when the market sort of has just a normal correction. It was the fastest one in history or something, whatever. It was so overextended it was bound to happen, and you shouldn't be surprised about it. I was certainly anticipating it, and where it goes remains to be seen, but you can't read too much into this sort of stuff. We've been here many times, as you can see in the past. We've been here back in 2011. We had a very similar look where we broke out and then came back and tested support here. It was extremely bearish breadth at the time. It looked like it was going to break down, and it held this support here. So we're down testing this sort of a bit of a, it went below this during the GFC. It went down quite a bit further during the GFC, but it tends to be in recent years that's been the benchmark where we're nearly at the moment. So it's going to be interesting to see. We don't want to anticipate what's going to happen from here. We want to just take the evidence as it comes, and at the moment we're holding this support here, so we'll see what happens in the week ahead, but wouldn't surprise me at all to see a rally in the near term at least, and then we see what happens after that. But it's going to be very interesting. This was another case where it rallied and tested back to support and then rallied on again. So you don't want to make assumptions about it just because it sold off. You don't want to say, when you start saying this is definitely the top, because you don't know that. You've got to wait for the evidence to be confirmed. That's one thing I've learned the hard way over the years. So let's have a look at some of these few charts. I'll go through a few of these real quick. And so we're down, S&P 500's down to the support here, the daily support level here. So it's well below the 100 now, so it's reasonable to expect to get a short-term rally at least, a short-term squeeze those shorts that have come on that were late to the party, and now they've got a cover. So you often see quite an aggressive rally. Not saying we will, but the VIX spiked massively here. I'll have a look at that in a minute on the intraday chart. E-mini has been going really well. Look at that in a minute on the intraday chart. QQQ also been very good. Oil hit the trender here. This was a breakdown of this distribution on oil here, and the start of February that broke down here on oil, and tested back up to the trender here, and then it turned back down again, and it's been very nice shorting again. Junk bonds were a bit late to the party. Junk bonds were a bit of a lagging indicator, but they were at this time. A lot of the time they're normally ahead of the market, but this time they were a bit late on this. It was a double top here on the weekly, which is interesting. So I'll just go back and have a look at some of these on the intraday template, because it's interesting. Oil has been nice. These have been all all short trades here. Swing trades using the intraday template on oil. That's oil's trade still going here at the moment, from here down to here. That's still short at the moment. And that was three separate trades here. 1 close, 2 close, 3 down to the current that's still open. And QQQ, that was 2 separate trades here. Got out of this a bit early. Got out of this on the cross of this MACD here. Got back in it again the next day, but that's just the way it goes. And then out of this again now. Close this on Friday. In anticipation of a bounce, not to say that it will, but it's overextended now to the downside, so we don't want to muck around with it. E-mini has been, this has been a swing trade closed out on Friday. A swing trade down to the that was from here. Goes back to here. These are a couple of swing trades, one to here, from here to here, another swing trade from here to here, and then this one was from here down to here. Almost got taken out here, but let it go, and it turned out to be right. But now this was closed out on Friday. The VIX, let's see the VIX, how that's turning over on the VIX here now. So we're not confirmed yet on the VIX. Let's just look at the 4 hour here. Just the big 4 hour still got quite a bit of upside yet left in it, but UVXY options were really good, and the SPY should expect a short-term pullback in the VIX at least anyway to start the week. We'll see what happens, but the SPY, yeah, that was closed out on Friday. That was just 2 swing trades on the SPY options here, so closed them out on the Friday just because it's overextended, and just taking precautions on that. Close that out here, and a lot of the time you can get a continuation to the downside, but I won't chase it now because it's too far gone. And just wanted to show this real quick, this option, Finviz screener. I just like to see how many stocks, so you just click on all the screener, and then you click on all, and you go optionable, and you go above price above 50, and you see, I like to see 30% above the 200-day MA here. Single. You want to see what's 30% above the 200-day MA and what's 30% below. What's 30% below the 200-day MA? Right, that gives you a good idea of what's going on. And if we have a look, what is, say, Nvidia was one, so you can have a look at Nvidia. See, that was hugely over. The 200-day moving average is way down here at 200. This is way overextended here on Nvidia. So that's the sort of thing you're looking at now. You can see it's come off a bit. This was great. This was great for a put option time here. So you can just see get a good idea of what's going on. And I'll just go through some of these real quick now. Some of these other ones. Some of these other ones now. TLT, been good. Bonds, it's been a real good one. Gold has pulled back a bit. Not sure what the reason is behind gold selling off a bit. Probably just profit taking, I suppose. But US dollar has been down, so I would have expected gold to be rallying a bit, but might be a short-term pullback, got overextend. FTSE's been down hard, it's been good. DAX has been a good one. Nikkei, that's been a good one off the double top here on the daily. Very wide of the weekly Kijits in there. Bitcoin has come back down to the 100. This was a distribution here. Everyone's huffing and puffing. Oh, it's going to 100,000 this time now. Not according to my analysis, it's not. But anyway, I don't get into arguments with people about that. Euro Bund's been a good one. It's been awesome. The Forex pairs, main ones. Euro US has been great. $1 Jappy has been a great one. It's a distribution here, a breakdown of a distribution. So looking for a retracement, a mean reversion back up to the 100 here at some point. $1 US has been absolutely great. NZ Jappy, NZ US, that's been great. NZ US. US dollar CAD, it's a great one. US dollar CAD. NZ Swiss, NZ CAD, US dollar Swiss, Euro Swiss, that's been a really good one. Euro Swiss, CAD Jappy, Euro NZ, they've all been good ones. Look at that beautiful distribution there on Euro NZ. Anyway, that'll do. Just a quick look around. There's been heaps of stocks that I've been trading too, but I won't go into the stocks that I've been trading. But needless to say, they were so overextended that they were ripe for picking, and I took advantage of it. So very happy with how February went, and we'll see how this month goes. All right then, bye for now.